Take us through the
Thank you so
strategy
much.
to grow this global footprint, and what targets have you set?
Well, I mean, we obviously have quite ambitious growth target in everything we do. We've been in Asia, and actually Singapore was the first office we set up here back in 2006. But it's also clear that since then a lot of stuff has happened within global capital markets. And I think it's also fair to say that how technology has evolved and how consumer behavior has evolved, and new business models, regulation, and so forth. A lot of things have changed, and I think we're quite well positioned to take advantage of that. But it's also very much a democratization of investing going on, where the tools and the means for individuals to actually access global markets and fulfill financial aspirations as well as making an impact is at a growing phase and still evolving quite significantly. And we are obviously actively participating in all of that.
So you talk about the opportunities. What will Asia mean for you in the next 3 to 5 years? Can you quantify how important the region will be?
Yeah, well, it's actually already quite important for us. I mean, we're doing just around 1/4 of our business in Asia. It has been steadily growing, and we believe that it will continue to grow. We've been seeing quite nice growth rates here, both in what we call the direct business, which is really focused on traders and investors, but also on our institutional business, where we have partnerships with other financial institutions that can basically leverage our entire digital value chain to reduce cost and complexity, but also to have much better digital solutions towards their clients. So in the next 3 to 5 years, we actually expect this to continue to grow, and I think that there's no reason why over time that Asia should not be a much bigger proportion of our global business, and whether that is 35 or 50%, I don't know, but I think it can grow a lot, and we definitely very focused here, not only in Singapore but also in Hong Kong, in Tokyo, in Sydney, in Shanghai, and I think there's an amazing development that we want to fully focus on.
Kim, you would claim that you were a fintech bank before actually fintech was coined as a term here. How important is it in this part of the world, and how does your offering actually differ from what you do in Europe?
Well, first of all, again, it is very true, because we launched the first online trading platform back in April 1998, and the business model has actually remained the same. So I think we were definitely a fintech bank before the term was ever coined. I think the strength about Saxo Bank is that we have what we call a global technology stack and a global set of business processes that we're then localizing. So really we have one global machine which can service clients in any asset class in the world, so you can trade or invest in any macro cycle of the economy, which I think is becoming increasingly important. And then we kind of package this for the different audiences, whether it's kind of a more buy and hold investor clients or more sophisticated trader clients, putting that into the platforms. But the underlying technology and the business processes are actually more the same than what it differs on a local level. So I think the power of our model is that you can really literally trade the whole world, whether that is China, Japan, US, Europe, whether it's in the big asset classes of fixed income, equities, foreign exchange, commodities, and so forth. So doing that on one single account is very powerful. And with everything we see happening now, now we see inflation coming, interest rates are moving, stock markets are getting softer, and so forth. So it's becoming increasingly important for investors and traders to be able to do proper capital allocation, and not least to be able to really trade the full macro cycle. There's been a lot of obviously activity in this bull market, but I think things could change, right?
Kim, what about the fintech side of things, which we're going to continue talking about here? And we've had so many different players enter in this part of the world. In fact, every part of the world, but particularly here with the dynamism. Perhaps are they nibbling at your ankles, as it were? And what sort of attrition, if any, are you seeing?
Well, I think first of all, it's quite interesting to see new players coming in, and I think there's been a lot of different models coming. This discussion about payment for order flow which in Europe is illegal. In US, with the likes of Robinhood, they've saw an amazing growth of their equity price initially after they listed. I think they were all the way up to $85, and now they're closer to, I don't know, 14 or 12 or something. So I think that the stability of a business that goes out and say to people, well, it's for free, when it's not really for free, I think it needs work. And I think there's some regulatory implications of that. When that is said, I think it's quite interesting to see that new players are coming into the market. And I think that actually for a consumer perspective, it's much nicer. Our business has actually continued to grow quite a bit, but it's also clear that especially in Singapore, there are many new players now, and actually we very much welcome that. And again, we believe our technology is better, our products is better, our service is better, our platform is better. But I think it's always good to see newcomers coming into the market. And I think it's actually what creates a dynamic market is that there's different interpretations of what an optimal client service should look like. What I don't believe much in is the people who says, well, it's all for free,
right,
because it's not all for free. And that I think will change.
Kim, in China, Saxo is 50.5% owned by Geely, and you've said before that when it comes to China, it's about tech partnerships. What do you make of the tech clampdown that you're seeing there right now?
Well, first of all, we've made a technology transfer into China, and we have Saxo Fintech in Chongqing. And I think that the development that you're seeing across the board, also inside China, is obviously that you want to ensure better products and services to the clients, but you also want to reduce cost and complexity, and you want to build compliance solutions that allows you to be fully compliant to navigate. I think what is fair to say is a continuously growing amount of rules and regulations across the board. So I think technology is a key part here. If you cannot manage the technology part and handle your data and be compliant, you don't have a business. And if you cannot have the best services and products at the lowest possible price, it's going to be very, very difficult. And I think that tendency we see in China, but we actually see it across the world. Of course, China is a more difficult place for someone who is a European company, and because getting licenses to roll out, what we're doing in Singapore and Hong Kong and other places is more difficult. So we've been starting with the technology part, but our ambition is definitely also getting licensed in China going forward, but leveraging, I think, Saxo Bank's unique technology stack.